At the request of our viewers, let's discuss the report on Canada's consumer inflation, which is due later today. Indeed, amid the lack of important data from the United States, Canada's CPI is a market-moving report today. The outlook is gloomy as consumer inflation is expected to post a negative print. This will assure investors to sell the Canadian dollar in favor of the US currency. So, if the forecast comes true, the USD CAD pair will climb in response. What other events will follow on Thursday and Friday? Let's find out now. The two final days of the week are going to be busy. On early Thursday, New Zealand will report on its economic growth. Analysts reckon that the GDP expanded by 2.3% on a yearly basis, stronger than in the second quarter when gross domestic product rose at the lowest rate since late 2013. Investors will certainly cheer the fact that New Zealand's economy has gained momentum. As a result, the New Zealand dollar could escape from a trading range and develop a rally, testing resistance at 0.6610 and even at 0.6675. Another report to consider on Thursday is employment data from Australia. On Tuesday, the Reserve Bank of Australia released the minutes of the latest policy meeting. Investors found out that the regulator voiced concern over the sluggish domestic economy, so it would be a good idea to take notice of the employment data, especially rate of wage growth. Any negative print on the labor market will trigger a sell-off of the Australian dollar. During the European trade, investors will shift focus towards data from the UK. Post-election optimism is moderating, so the pound sterling is making a downward correction. On Thursday, traders will find another excuse to sell the British currency. The Bureau of National Statistics will provide data on retail sales, which are expected to climb 0.2% in November. At the same time, an annual rate could ease to 2.1%. Besides, traders are anticipating a policy update from the Bank of England. The central bank is likely to leave the key policy rate unchanged. Investors are most interested in the words of the officials who advocated for putting monetary policy on hold. At the previous meeting, two members of the Monetary Policy Committee voted for a rate cut. Are they going to keep their stance? Besides, market participants are looking to a revised outlook for the British economy. Yesterday's speech of Carney revealed positive notes. The Bank of England governor welcomed Brexit clarity following the victory of the Conservative Party at the parliamentary election. Nevertheless, he is widely expected to downgrade economic forecasts that will put pressure on the pound sterling. Next day, the sterling will face a challenge of the UK revised gross domestic product for the third quarter. The flash estimates suggested a slowdown in the British economy to 1% in annual terms from 1.3% in the previous quarter. Analysts project that the revised reading will match the initial estimate. It will be bearish for the pound-dollar pair. Later in the global trading day, investors will get to know similar data from the United States. The consensus is more optimistic for the United States, as analysts foresee an uptick to 2.1%. This would be another excuse to sell the pound-dollar pair. Besides, traders will be poised to buy the USD CAD pair, despite a report on Canada's retail sales, which are expected to rebound slightly to 0.1% in October. Apart from the above-said events, the economic calendar reminds you of other important economic data. On December 19, the Bank of Japan will announce its policy decisions. Switzerland will unveil exports and imports data. ADP payroll processor will report unemployment change in Canada. The Federal Reserve Bank of Philadelphia will release the US Manufacturing Index. On Friday, don't miss inflation data from Japan, a GfK Consumer Climate Index for Germany, and a series of metrics on the US consumer sentiment. You were watching Forex Trader Calendar on InstaForex TV channel with me, Kate Tikhina. We wish you profitable deals.